Hello and welcome to KD's Business Tips. Michael Lapide here in a short video to talk to you about how to set up a chart of accounts for a business and some tips. First of all, setting up your COA, your chart of accounts for small business, it's really the foundation to your bookkeeping. So to start the bookkeeping without having a foundational chart of accounts, you're already probably going to be in a little bit of a mess. So your goal is to set up the chart of accounts before the bookkeeping if possible. If not, revamp it, revise it, review and revise it as soon as possible. Do not wait. The longer you wait, the more difficult situations you could rise into. The chart of accounts categorize what basically financial transactions, right? So you're going to have your main categories. You're going to have your income categories, and you might have various revenue income categories. Expenses, you're going to have lots of different expense categories. You're going to have assets, different asset categories like bank and other assets you have. Liabilities, whatever liabilities you are, like loans, lines of credits, things like that, credit cards. And then equity, which is the final section, which is usually just shares and retained earnings in most businesses until you get bigger. So make sure that your chart of accounts is broken down into those 5 sections and all the accounts within them. And here's a quick step-by-step guide. Number 1, understand the purpose of the chart of accounts. Remember, it's a structured list of all the accounts, every account you will enter into. And the purpose for having that is to have a clear and organized framework towards the financial reporting, whether it's for tax or internal financial planning or anything like that. The chart of accounts lays the framework to make sure you have proper reporting. Number 2, determine the structure, right? So we talked about dividing into those main categories too as well, but then determining if we want to have sub-accounts, for example. You may have investments, for example, and you put investments, and then you put under the sub-account, investment 1 is gold, investment 2 is these bonds, investment 3 is these stocks, investment 4 is crypto, and here's my total investment. That way, if you put sub-accounts, it will total the total investments, but yet you can still have them separately. So determining the structure of your chart of accounts is very important for the main accounts and the sub-accounts. And then you also want to assign account numbers as well. So a lot of times we use 1,000 to 1999 for assets. We use 2,000 to 2,099, 2999 for liabilities, the 3,000s for equity, the 4,000s for revenue, the 5,000s for expenses, the 6,000s for cost of goods sold. And again, that is up to you. That's just something we do with the numbers. You can do the numbering system whatever you want, but make sure the numbers are, again, around the assets, liabilities, income, expenses, and equity. Okay. Also, you want to customize your accounts based on any specific needs. So if you have something specific, so for example, the bank says, well, we need you to report these 3 accounts. Make sure you have your chart of accounts tailored to those to separate those items. That's very, very important that you know what you might need to separate, because instead of lump summing it, then you got to try to pull it out later. Okay. And you can always start with broad categories, then add more subcategories later. So keep in mind, as long as you have the main categories, you can easily add the subcategories or sub-accounts later as well. Now, you want to make sure with your chart of accounts that it works with your accounting method. Are you using a cash method basis or using accrual method basis? What is your basis? Is accrual or cash? And that will determine, for example, if you're doing accrual, you'll need accounts payable and accounts receivable. If you're doing cash, you will not need receivables and payables, as an example. So you need to determine what type of accounting method you're going to do to make sure you set up the right accounts accordingly as well. And the key to setting up the chart of accounts is to do it inside of a software, QuickBooks, Xero, Wave, those types of software, so it's set up within the guidelines of the software, and you also know it's done right because it's within these categories that are available. And the last thing to remember is to review and refine that chart of accounts regularly, like, as you go through the year end and you're going through the accounts saying, yeah, I'd like to separate this a little more, or those can be joined together, or we need to break this out. Whatever it may be, you know, to review and refine them regularly as your business grows, diversifies, and so forth, okay? Really, again, just to remember, the chart of accounts is foundational. Setting it up for financial management. A well-organized chart of accounts provides clarity, simplifies reporting, and can support your compliance as well, of course, right? Take time to customize it to your specific needs and keep it updated as your business evolves. If you've got any question, we'd love to hear from you. Post in the comments below, and we'll see you in the next video.